Welcome to Markets Now. I'm Michelle Rook along with John Payne with Hedge Point Global Markets. And we are seeing lower prices over in the grain trade now, at the exception of Kansas City and Minneapolis wheat. The livestock futures are mostly lower except for the feeders right now. And John, I want to talk about soybeans first of all. Breaking down to new lows for the move. We're below the 200-day moving average, and the funds are still long here. How much more pressure do you think we're going to see there in liquidation?
Well, I think we're down in this range here for the next week. So if you're looking for something to change, my thoughts would be the end of the quarter, end of the month, and you've got that big stocks and acreage report that maybe you could inspire some change in the fund direction there. I think wheat's a good example. You mentioned wheat being higher. Wheat was the dog of the trade really the last 3 weeks. So, I think at this point, though, you worry about the product markets more than you do the soybeans themselves. You've seen product markets completely collapse. The crush margins that we follow, and using just CME math, you're looking at a move from close to 100 or $2.40 per bushel, maybe down to $1.40 now, just in the last 10 sessions. So for whatever reason, the crush trade is no longer in vogue. It's kind of across the commodity complex. Anything that is crushed, those margins have really fallen apart over the last 3 to 4 weeks. And for beans, they've got a long way to go if they want to get back down, to an area where they kind of compete against corn. So yeah, buckle up here, especially in the meal. I think the meal is the one you really be careful about here.
Yeah, because the funds are still really long in that market. They were record long here just a few weeks ago, weren't they?
Yeah, record long. And there's a lot of shorts. I can speak to more than a few that have kind of sat in that trade and have been wrong or maybe even added to it. And I think there's a lot of convincing here that there's no reason what meal needs to be at $500 a metric ton, not with what's going on in the United States right now when it comes to hogs, and not when it's coming down to China. Chinese hogs really have been on the offer. Every morning there's little to talk about in hogs, so you kind of grasp onto straws over in China. The Dalian markets do trade in the overnights, and those have kind of bottomed here. So hopefully we see some sort of wheels turn in regards to hogs, but I think in the short run here, you just got an industry that they don't want to kill right now. They want to slow everything down, and that's created a backlog of supply in the near term. What gets us out of that hole? I don't know. I think in the near term, the consumer's got to pick up the slack here and start to buy some pork.
Yeah, I know demand concerns have been promulgating the market for sure on the meat side of things. I got to also ask you about corn. Obviously, we had good exports this morning. China's been in purchasing now over 100 million bushels over the last several sessions, but that market got kind of pulled down here by soybeans. However, we have the funds which are actually short that market. So where do you think we're going to go?
Well, I think it depends on the market. So you've got the near dated markets, which I think have the cash strength. And then for me, if you're bullish corn, I'm bullish physical. I like physical corn. The paper is bullish up front, I guess you want to be bullish, but it's really that physical supply, I think, that offers you the best protection, so to speak, because I think basic demand is good. I think the paper, when you get back in the curve, it's so easy to sell that you've seen a lot of the deferred contracts kind of price in my opinion, a pretty good start to the U.S. supply season. You've got the discount already to cash built in. I think a lot of folks haven't sold yet, and it maybe scares me a little bit. But when it comes to corn, I think Brazil is going to be a huge deciding factor. So I still like where volatility is right now. I think the decent play is to maybe get rid of some old crop supply and then buy call options or something out there that would catch a explosion based off of a South American supply rally. If we don't get that, though, and when we do talk, record crop in Brazil, that the premiums disappear. This export story that we have in the U.S. right now will go away, and we're kind of grasping onto those crush margins again, which are drastically lower than they were. So I think in the short run here, I would be friendly more to the ag markets, but I think in the long run, it's a tough story to tell with interest rates at 5%.
Yeah, that's really squashed the market in a lot of respects. Wheat market, besides short covering, do you see anything else that can pull these markets off of the, dismal trade that we've seen? I mean, I think we had new contract lows in Chicago wheat just yesterday.
Yeah, I mean, it doesn't trade a lot, but the Black Sea contract at the CME, you can look and it has like a closing settle. I think that's been down, and this might be a stretch, like 14 weeks in a row. So you've seen the Black Sea supply contract, which is basically Russia, right? Russia's fine. And I don't mean this from the war perspective or anything like that. I mean from a physical perspective of, is there wheat to sell? Yes. Is it there to be sold? Yes. Russia's got an export tax up right now. They got an export tax of probably like, I want to say $50 a metric ton. So there's $1 a wheat right there that comes out if they would ever lower that export tax. Now, I don't think they will, but I think that's where corn, you look at all the other commodities, crude oil, specifically hogs. I mean, everything's kind of gone back to that pre-COVID test level. Maybe we call it the 2021 levels. But at this point, corn is still above it. Soybean oil is way above it. Soybean meal is much above it. A lot of the ags could go back down to those levels. And that's where, from an end user's perspective, and I work with a lot of guys who want to buy, I'm trying to kind of be patient here because I think, the volatility runs that can come from fear to the downside are certainly there. I don't know if we'll see 4, but I think, low 5 certainly is in the cards if, we're looking at a great crop here and a great crop in Brazil.
So the Fed decision is out of the way. We may still have a few bumps with the banking crisis, obviously, but the next big infusion of news in the market is going to be this planting intentions report. What's your thoughts right now about what we see for acreage moves?
Well, bearish wheat. So we just talk about wheat, being on one side, maybe being hopeful, but the acreage increases we're seeing, well, it's not a lot. I mean, we're not like jumping out of this hole we've been in for the last 100-year lows. We're up 2 million, so it's not crazy high, but it is a supply increase in a market we really don't need. So maybe I expect the USDA to lower that a little bit and divvy up those acres. The one I'm interested in really is more cotton. I think cotton has that Chinese supply story that could really get the markets moving. Now hogs has that as well. I think China, if you're looking for a disappointment for the market, it's been this reopened trade to China. Even myself, I thought we would see, the world kind of awaken, but that hasn't been the case as of yet for many reasons. So I think cotton is one on the acreage number to watch. I think the worry for me is you get a double whammy on corn and you get a double whammy on beans. And by that meaning higher acres and lower stocks use. So higher stocks too. So you get more supply that's going to come online because of new crop. You get more supply that comes online because of old crop. And then you get the USDA kind of throwing on demand decreases in the coming reports, and that's how we can get to 2 million metric ton 2 billion bushel carryover for corn rather quickly. Now we have to grow it, so it's a long way to go, but I'm not a big fan of betting against the U.S. farmer.
Okay, yeah, we do have quarterly stocks out as well that we always need to watch as part of the report fanfare and fireworks as well. And like you said, cotton has been so disappointing here as of recent. Okay, the meat sector, like you said, you've already kind of talked about this as far as, we have a lot of headwinds here with demand and whatnot, and those markets have been really crushed here with the risk aversion because of the banking sector. How much more do you think we're going to see inserted in terms of downside risk?
Wait a couple days. I'll be smarter probably. If you called me on Friday, right? And Friday I would have said, oh, we're close. And then, Monday and Tuesday of this week didn't give us any reprieve. I mean, I think at this point, in the case of hogs, we need to see the, kind of a surprise on the slaughter side. And I think that'll help, increased demand out of China will help. I think this grain stocks number, the quarterly number that comes out the 30th. So quarterly hogs and pigs, we really only get 4 hog reports a year. This is one of them. There's an inspiration for some supply numbers to come out during that. In my opinion, the market is, what are we, $12 right now, June over the cash carcass. That should be 20 in most normal years. So at this point, we've seen kind of a takedown of speculative risk in meats. The worry you have if you're, kind of a broad-based trader is look at over cattle right now, especially the live side. I mean, we're trading 175 on April of 2024. I mean, if we don't need to have beef prices at these levels, you certainly don't need to have the live deferred at that level. So we need the feeders stay up for those markets to trade at those levels. So that might be where you look to put your risk management. That's an all-time high. At this point, though, anything I'm telling you, I would have told you 2 days ago. So, just continue to wait, I guess.
Okay. Thanks for joining us, John Payne with Hedge Point Global Markets, and that's Markets Now.
Thanks for having me.